Robinhood Markets Hood, Beginner's Guide. Imagine an app on your phone that lets you buy a single share of a company for zero commission, lets you put your spare cash to work in a high-yield account, and now even runs a tiny custodial investment account for a kid you know. That is Robinhood Markets, ticker HOOD, and in just a few years it has gone from a scrappy free trading app into what management calls a financial super app. Quick reminder before we go further, this is for education only, not investment advice. So, what does HOOD actually do? Robinhood makes money in three big buckets, and it helps to picture the company as three businesses stacked on top of each other. The first bucket is transaction-based revenue, which is roughly 43% of the total, or about $455 million in the most recent quarter. This is the original Robinhood. You tap a button to buy a stock, an option, a crypto coin, a futures contract, or even one of the newer prediction market contracts, and Robinhood routes that order to a big trading firm called a market maker. The market maker pays Robinhood a small fee to handle that order. That fee is the famous PFOF, which stands for Payment for Order Flow. Basically, the wholesale trading firm pays Robinhood for the privilege of executing your trade, which is how the app can advertise zero commissions. Crypto alone is about 18% of total company revenue, and the newest pieces, prediction markets and futures, just hit record quarters. The second bucket is net interest, which is about 40% of revenue, or roughly $425 million in the quarter. Net interest just means the spread Robinhood earns on customer money. When you leave cash sitting in the app, Robinhood lends it out or sweeps it to partner banks and earns interest on it. The same thing happens when customers borrow money to buy stocks on margin, which is just trading with borrowed cash. The third bucket, about 17% of revenue, is everything else, the Robinhood Gold subscription at $5 a month, which now has 4.34 million subscribers, plus the institutional crypto exchange Bitstamp that Robinhood bought, plus advertising. Gold is the recurring revenue piece, the part that keeps paying even when trading goes quiet, and it is now attached to about 16% of all customers and 40% of brand new ones. So, who does HOOD compete with, and how does it win? Robinhood is the largest retail brokerage in the U.S. by number of funded customers, 27.4 million of them. The traditional competition is the old guard of online brokers like Charles Schwab and Fidelity, plus the crypto-native apps like Coinbase. The honest framing is that Robinhood has what investors call a narrow moat. A moat just means competitive advantage, the thing that keeps rivals from catching up easily. Robinhood's moat has two real strengths. First is brand dominance with the next generation. If you're in your 20s and you opened your first brokerage account in the last few years, the odds are very high you opened it at Robinhood. And the Gold subscription plus the Gold Card credit card are slowly turning the app into your daily financial hub instead of just an occasional trading screen. Second is a brand new wedge called Trump accounts. Under a U.S. Treasury program, Robinhood was named the sole initial trustee for a new type of custodial investment account for children, and 5.5 million kids have already been signed up. That gives Robinhood a multi-decade relationship with a generation of new investors before they even turn 18. The honest weakness, though, is that roughly 43% of revenue still depends on payment for order flow, which is the practice we explained earlier. Regulators in the U.S. have looked at PFOF more than once, and any rule change there would hit the transaction bucket directly. Crypto regulation is also still being written. So Robinhood wins on brand and product speed, but it has a regulatory tail risk that the old-line brokers do not. What are the key drivers for the business over the past 5 years? Three forces explain the last 5 years. The first is revenue diversification. Robinhood went from essentially 2 businesses to more than 11 separate businesses, each doing $100 million or more a year. Beyond the original stock and crypto trading, you now have margin lending, the Gold subscription, prediction markets, futures, a credit card, a banking product, an advisor platform called Trade PMR, the Bitstamp institutional exchange, and Robinhood Ventures. The lesson is simple. The company is far less dependent on any single revenue stream than it was a few years ago. The second force is operating leverage from artificial intelligence and cost discipline. Operating leverage just means that as revenue grows, costs grow more slowly, so profit grows faster than the top line. Robinhood says AI now handles more than 90% of employee workflows, and engineers are shipping about 50% more code per person than a year ago. The engineering and customer support teams absorbed 50% more trading volume in 2025, with basically no new customer service hiring. The third force is asset gathering. Total platform assets, the dollars customers actually keep on Robinhood, reached $307 billion, up 39% from a year ago. Customers added a net $68 billion of new deposits over the last 12 months. More assets on the platform means a bigger base for the net interest bucket and more sticky customer relationships. Management calls net deposit growth their North Star metric. To wrap up, so in one sentence, Robinhood is the largest retail brokerage in the U.S. by customer count, earning roughly equal chunks of revenue from trading, from interest on customer cash, and from subscriptions and adjacent services, with a fast-growing wedge into the next generation through Trump accounts and the Gold Card. If you want to keep an eye on Robinhood as a learner, watch two things: whether net deposit growth keeps compounding at double digits, and whether U.S. regulators ever take a real swing at payment for order flow. Again, this is an educational overview only and not investment advice. Happy learning!